We are currently looking at a US dollar Swiss franc 15-minute chart, and let's just separate the days here. Add 0 GMT right here. Price has, this is for another lesson, but from the high to this low we've retraced 62%, and now we are moving into the new trading session. Price has rallied to 127% extension, and what we want to keep our eye on now is this level of resistance, and watch for price to retrace. We are currently still in the Asian session at the moment, as price consolidates waiting for London to open. Now we are moving into London open session at 7 a.m. GMT, moving into the open of the Central European session as we see liquidity picking up. This is our first target area that we're looking at, is either the last level of support here or the previous day's low down here, which is quite far away. It's over 100 pips away, because we had an unusual move where we made new highs during the Asian session. Now we're watching price retrace from 2380 to 2340, roughly 2345, and this is the area that we want to focus on at this point, particularly since the Central European session is opening up. They're creating this liquidity, and if all other factors are giving you confidence that price is likely to rally or bounce at this point, then you want to make that trade as close to this level as possible. We may see it slip through slightly, but as long as price is trading above this 2345 level, then you want to go long right at or about 2345 plus spread. This is where you want to trade. The reason why is because price may bounce here respecting this level, which it does at a high frequency, and it may just move to 2382, which is almost 40 pips. So you have 40 pips of room to get your first profit between 2345 and 2380 and change. So trade it long here as close to this level of support as possible. As we see price further confirming above this level, that's good for our trade if we went long here 2345.50. Now look at this. On this reaction, let's just go back to this candle right here. If you traded it at 50, 123.50, price went as high on this trade as high as 58. You want to stay on the positive side of the dealing spread. For your trade to work out, you have to move above this 2360 level. Price first has to hold above 2350, 2345 to 50, but we need to make a leg up, and we need to see this dealing range right here. We need to see that dealing range move above 2360. If it does, that's very bullish for our trade, and we should get a spike to 2380. Now we're trading above 2360, and we want to see a spike to 2380. You see how it comes back and tests 123.60, and even within this consolidation, we need to see a spike to 2380 for our first profit, and we should get it here. There we go. So 77. So if we entered at 50, we're at 77. That's 20 7 pips. Now you've made your 20 to 30 pips, and you probably make your 30 on a spike up. But the reason why you want to take profit early is because you see our price spiked up. You would have been plus 27 pips, and price comes all the way back down here to test 23.60 again. Now we move up to 80, giving us even more. Price is rejecting the intraday high at present, which is even a possibility of a short or a skim short. But we still hold above 23.60 before it finally winds up and trades above 2400. Now, there's a difference between looking at these charts, scrolling through these charts, and scrolling through a 1 hour chart. Obviously, these ones can put you through a little bit more pain, or you can see how long it can take, or all of the different price action that it gives you a bit of a closer look of the price action that you would experience in a realistic situation in a live market. But look at here how we traded in these ranges, traded in this support resistance range, traded here. But the idea is to take our profit, identify our key levels, and take our profit before it gets to or has to get through these key levels. We need enough room from here to here to take our first profit. And again, look at the 15-minute chart. We trade in a range, we move out. We trade in a range, we move out. We trade in a range, and we move out. As we proceed throughout the day here, let's watch to see what happens. We are now getting later in the day, and as the Asian session starts to trade, then we will see these we will see price retrace. It's unlikely to make a new high. Our first level that we want to look at is down here at 123.80. You see how price respected this level on 2 occasions before moving through, and now price is just drifting lower here as we move into the Asian session. Often this is a result of just a decline in the buying interest. Consolidating, and as Asia starts to come alive, we see some price action. So we see a move of 20 pips as Asia comes alive. Probably won't move above this high. We can tell by the shape of these candlestick formations that liquidity is very thin. Look how narrow this price range is. We see a little bit of movement in foreign exchange transactions through the Asian session, but look at the shape of these candlesticks. Price is is very, very thin, very few transactions. Now we're nearing the open of the European session. And again, we're watching our level at 123.80. The other level that we're watching is this high up here at 124.33. We're also looking at the previous day's low, which could be 123.40, but it also could be lower because we had the rally, the Asian rally during the session. We're moving through the quiet period, the low for the quiet period. We've moved through, and you see the jump in this price here. That again suggests lower liquidity, but liquidity is starting to pick up now as we're nearing the open of the Central European session. Price comes back up, tests this level of support, and now we're bouncing at 123.80. Look at the bounce that we get. The low is 123.80 right on, and it bounced immediately to 123.95. And this is where a lot of traders get into trouble. You see here how price bounced at 23.80, and where a lot of traders get into trouble is just on this bounce alone, it came back 15 pips. And the reason this is important is because if you're not looking at the important levels, even on these small 15-minute charts, then it's important for you to know where the market is going to bounce. These are what are called, in the larger time frames, we can't see these small levels of support and resistance. Then these are called fractals. These are just kind of micro dealing ranges and micro patterns within larger patterns. If you think the market is still bullish at this stage, then you want to trade as close to that 23.80 level as possible, because there's enough room here that if it makes an attempt at the high and fails, then you still have lots of room for profit. You've got between 80, 23.80 and 24.25, 124.30, 23.80 and 24.30. Now liquidity is really starting to pick up, and price is moving higher. We are targeting 24.30. Look at how price dealt in this range, rallied through, remained above this range, rallied through, and is remaining above the range in this 10 pip range, winding up for a go at the daily highs. There we go. Now we're making a run at the daily highs, and if you are going to trade this daily high and trade it short, you want to trade as close to the high as possible, in or about 24.33. You can trade it lower. You can trade it at 25 or 33, or even you can even anticipate a slip through that level as well. We get a rejection, and look how it holds above the 24.20 high. So it's trading again in this 10 pip range. And if you haven't got in your trade yet, you better hope for another attempt at the high. Is anybody short here? Wonderful. We get a spike through the high and a beautiful rejection, a doji, a dragonfly doji, long-legged dragonfly doji. And once price failed to trade above this high, you want to short that baby. So if you short it at 24, let's say 25, say 24.25, let's watch. Price moves below 24.20. Next, targeting 2400. Now we're at 2400, and we need to move below 2400. 2400, it reached a low of 98 plus spread. Therefore, if you traded it at 25, you're already in profit. Now price is trading below 2400 with a bit of a struggle, but we need to trade and hold below 2400. Now we make a go at 23.80. And that's plenty of room. We've already had plenty of room now to take some profit, because 23.80 is a very important level, as we know. This level of resistance and support is 23.80, and we're bouncing here. We might even get a larger bounce here. Okay. Now price is bouncing well off 23.80 as we're still in the peak of New York session now, New York and London session. Look at the confirmation testing the 24.10 support, the confirmation of the bearish move. So at this point we could anticipate a nice move downwards. If you're still holding some bearish or some short positions, you want price to now move and trade below 23.80, which gives further confirmation. So confirmation 1, failure to hold through the highs. We come down to 23.80 support. We bounce nicely, 30 pip bounce, a nice hammer, a move lower to 23.80. So confirmation, confirmation hammer. Now we need a confirmation by seeing price trade below 23.80 as it potentially makes a run for, I'd say 23.60. Let's have a look. We're making a run for 23.60 now, and let's watch. It's still holding at 23.80. Now we make a run for 23.60. And we actually move through 23.60 to this low here at 23.42, and it is respecting the lows at 23.42 as we bounce and retrace back towards 123.80.